Perhaps a bearish view here. And in fact, on Friday's trade, we saw a lot more put options trade than we saw call options. The only thing that's interesting about it right now, at least, is the top 4 options on the S&P that were traded on Friday were put options, but they were all down in value, meaning people were selling them as opposed to buying them. So that's going to be key here.
Let me just play for you what Mark Faber said to us earlier this morning about this market.
The expectations are very high. The market is no longer oversold the way it was in December. And everybody thinks the risk trade is on, go long equities. The hedge funds have positioned themselves on the long side and optimism is running very high.
Right.
I would be very careful at this stage.
And he's expressing what you, Don, have talked about before, which is when it's so one-sided, you've got to be careful.
And it's also interesting, too, because from a technical or chart-watching perspective, Mike, you and I have watched these things every once in a while, not because we believe that they're the whole thing, but they're a component of it. A lot of chart watchers think that the pattern of the charts right now is setting up for perhaps at least a bit of a pullback here.
Well, the question is, how strong is the economy? We know it's been stronger, it's been relatively stronger than Europe, but does it continue? That's why this week's data is important, the ISM numbers, the comparison that Kenny Polcari was making between Europe and the United States. If we go up, that will make people happy. And of course, the jobs report, another month over 200,000 would give people a little hope that we're not dead yet.
Right, no, far from that. All right, Mike, Don, thank you. Well, our mover and shaker this hour is Andrew Mason. The Groupon co-founder and CEO this morning is struggling to contain the fallout from the latest concerns about the deal-making company's business model. On Friday, it reported what it called material weakness in its financial controls and said that fourth quarter results were worse than previously stated. All of this is because Groupon failed to set aside enough money for customer refunds. It's the latest setback for the company after its IPO in November. The stumble raises new questions about the way Groupon conducts its business and also its accounting methods. More now, though, on the story about GM's drive to sell fuel-efficient cars. The automaker says it expects to have sold 100,000 high-mileage cars in March, which is a record for the Detroit automaker. First on Bloomberg this morning is Don Johnson. He's the head of GM's U.S. sales. Don, great to have you with us on In the Loop.
Good morning. How are you?
So good. So what is driving this? Is it all about higher gas prices?
Well, I think it's a couple of things. As you said, we're going to set a record this month. Over 100,000 vehicles that get 30 miles per gallon on the highway or better, and that's going to represent about 40% of our fleet. That compares to 3 years ago when vehicles with that kind of mileage was only about 16% of our fleet. So first of all, we've really broadened our portfolio, invested in powertrains, be it turbocharging, direct injection, or 6-speed transmissions, as well as electrification. And that has given us much a wider range of choice for the consumer. Clearly, as gas prices go up and as there's a bit of volatility in gas prices, that's driving consumers to look for those kinds of options when they buy a new vehicle.
All right, but this is also coming at a time when you're seeing declining sales for your gas-guzzling trucks, essentially. I mean, however, you make more money. You know, your profit margins are better with your truck. So, well, it might be great that you're seeing higher and higher sales for fuel-efficient cars. Your trucks are declining, and that's really where your profits are.
Actually, full-size pickup sales will be up year over year. And the percent that full-size pickups make of the overall market has actually stabilized. So it's not really that the trucks are going down right now. It's that crossover, the crossover segment and the smaller car segment are the ones that are growing the most. So stable in full-size pickups. I think the important point is, now that our portfolio is much broader than it's been in the past, we're in a position to really meet whatever consumers need, regardless of what the price of fuel is.
Don, can you tell us, for instance, if gas prices go up, let's say another 20 cents or 50 cents or whatnot, what that translates for you in terms of sales of these cars?
We expect to see continued strength in our small cars like the Chevrolet Cruze, the Chevrolet Sonic. It's hard to speculate exactly what's going to happen as fuel prices may go up or go down. What we do know is that consumers are becoming more resilient to fuel prices, and it's more about the volatility that affects their purchases rather than the absolute level of them.
Now, with getting the sense that more and more consumers want fuel efficiency, what does that mean then for your Volt electric cars? And could it mean perhaps that you might restart production?
Actually, this month we're going to have a very good month for Volt. We'll probably sell just in excess of 2,000 units. We believe that that technology is leading edge and that it will continue to be very successful in the marketplace. We will make sure that we match production with demand, and at this point we're going to see what that demand looks like it's going to be for the rest of the year. But this month will be a very good month for Volt.
And what's going to determine that demand? What are you watching for? What are the indicators, Don?
Clearly, daily sales and monthly sales, consumer and dealer acceptance, which, as I said, for March has been very positive for us.
Okay, and just quickly, Don, I mean, we've been throwing this statistic around, which is quite interesting, which is that the average age of an American car right now, or a car in the U.S., is about 11 years old, which means that there's some pent-up demand for buying new cars. When is that going to change? At what point do you think Americans are really going to start replacing their cars versus just fixing them?
Well, actually, that pent-up demand that you refer to has been driving the market in the last 12